Okay, well, it is 10 o'clock. We will go ahead and get started. Once again, want to welcome everyone to our meeting. We have Miranda Teague with Truist that will be presenting with us. Unfortunately, she's not able to log in the actual Zoom link where we can see her, but she has been able to call in. So she will be presenting from her phone. And we'll have some content if you're interested in getting the workbook sent to you after the meeting of the presentation she's providing. Please leave your email in the chat. And once again, any email information or student name and school information, you will only need to place one time in the chat. We will get with the school staff to verify the student to make sure they attend the 3 schools that do provide gift cards if you attend. Once that is verified with the staff at Berea Middle, Lakeview, or Tanglewood, we will get those gift cards to the campus between 2 to 3 weeks to give to the parents that have participated and joined us today in this great meeting. All right, well, we will move on to Miss Miranda, and welcome, Miranda, and we welcome you and are really excited about the information you're going to provide this morning.
Thank you so much, Keisha, and welcome everybody again. My apologies. For some reason, Zoom is just not liking me today, but we'll see if we can go further. If you do have the workbook, we're going to start on workbook page 5. If you do not have the workbook, don't worry. We will be sending that. Keisha will get that out to you if you don't. But again, I'm Miranda Teague from Truist Bank. I am the financial inclusion leader here with Truist. I have been with the bank for 25 years and in this role for the last 12. With Truist, we do have our mission and value is to inspire and build better lives in the communities. So whether you guys bank with us or not, that's okay. Everybody is part of our community. So like I said, we'll start if you do have the workbook, page 5. And this is talking about what we're going to do today, our agenda. We're going to talk about determining your financial situation. We're going to learn some of the basics of banking. Some of that we might skip through because some of it's like parts of a check. We're really going to focus in on assessing what is your budget and your savings plan. And then we're going to throw in a little bit of credit and how to build and repair that credit. So that's basically what we're going to cover. Like I said, we're going to start off with page 5. And I will let you know throughout the course today, hey, we're on workbook page, whatever, we're on this one. So that way you can go back into and just refer to the workbook as we're going along, since unfortunately, I'm so sorry again that we cannot see it. So we're going to talk about determining that financial situation. Now, as we look towards your future, it's important to know where you stand. So here's some things to consider. The first thing I like to talk about is what do we spend our money on? And when I ask clients that question, usually we get what do you guys spend your money on? Keisha, you can see if they'll throw some comments in the chat for us. What do they normally spend their money on when we ask people that? Some of the things people might say what they spend their money on is the basics, like mortgage, rent, car payment, utilities, groceries, gas.
Yeah, so we've had someone say bills, and everyone, please mute your mics. Thank you.
This one is Zoom. Yeah, that one was
okay. Some bills, some normal bills, exactly. But when we think about determining our financial situation, when we think about that, we need to ask ourselves a very honest and open and transparent when we say, what do we spend our money on? We know the basics, but this is where it might take you going back 3 to 6 months of your statements, figuring out where you really spend your money on. In order for a budget and your goals and your financial situations, you need to be very transparent with that. So when I look at it, something I didn't realize until I went back and started like figuring out where's my money going? Like by the time direct deposit comes in and everything is like being paid, your groceries, your gas, everything. It's like, where's all the rest of that money going, right? And sometimes it was that junk money. If I stopped at Starbucks, got a cup of coffee in the mornings on my way in, or I forgot lunch. So then I was heading to go out to like Chick-fil-A or, McDonald's somewhere. So then I was spending maybe another $10. Well, if I was doing that, my husband was doing that. If you're doing that every day, let's just say lunch, every day, Monday through Friday, you're eating out. Well, that could be $50 a week. Well, that's not including what you might spend Saturday, Friday night, Sunday, on the weekends. 50 might turn into, if you're doing that every day, well, that could end up being $200. So when I ask, where do you spend your money? This is where you might need to go back and be very honest and transparent. Then we talk about, how much money do you bring in each month? How much of disposable income you're going to have? And then you're going to have to ask yourself, what is your financial priority and what is your goal? And making sure your goal, your priorities all line up with what money's coming in and going out. So now we're going to talk about that. Where does that money go? We've asked a lot about where you spend your money. And so we reviewed that. Examples of type of people are, I know where I spend my money, like down to the penny. You're like my daughter used to be before she got married and had her own kid and a family. As long as she wasn't getting declined, she was okay. Or I kind of balance my thing. I know kind of where it is. There might be something that's not there, but I'm doing okay. So these are just some kind of examples of maybe who we are. So workbook page 6 is tracking all of those expenses, right? What actually we're doing. And I love this expense because it talks a little bit about everything, right? We talk about the personal and the family and, the mortgage, the rent. But when we talk about food, let's think about how often do we eat out? Are we eating out at lunch? Are we grabbing something through the drive-through on our way to take kids to ball practice or after school? Understanding, with this, it starts to understand what your savings and your spending habits are, right? What are your debt payments? Even your household budget, I don't know about you guys, but when it's time for me to get like household supplies, toilet paper, paper towels, all of that kind of stuff, I feel like my grocery bill is a little bit higher, right, on those. So you have to remain vigilant no matter what type of tracking method that you decide. So in the chat, you can put, what do you use? I don't use a budget sheet per se anymore. I just have a piece of paper. At the top of it, I write every payday because I only get paid twice a month. So tracking might do that. And so I'm a visual. I like to write it down. Some people use still tracking expense sheets. Some might do a QuickBooks. But it's a critical thing to know where your money's going. It's a part of learning your financial situation, right? We're all different. The one thing that I want you to remember when you're tracking your expenses, always put a box for what makes you happy, right? We work hard for our money. And so the last thing you don't want to do is not spend anything that makes you happy. So instead of me buying a cup of coffee or going to Chick-fil-A every day, because those are my two favorite things that I love, maybe I'm like, okay, where can I cut that back? Maybe on Mondays, I go get my cup of coffees because we all know after the weekend, Mondays can be like, ugh. And then maybe on Fridays, I take myself to lunch and celebrate the week. So instead of me spending about $15, $20 a day now on coffee plus maybe lunch, I'm doing it once a week. That's not including maybe I realign what I do on the weekends. This is just me. So this is just something that still makes you happy. You still want to include that in your tracking. A good way to think about writing down your budgets and looking at it to decide, maybe there's something you can cut out. Maybe you're spending too much on like Netflix. We all have those subscriptions that we are paying for, right? Like Netflix, Hulu, Disney Plus, all of these other things to watch our favorite shows, right? And then maybe we have that gym membership at the first of the year that we're like, okay, this is my year. I'm going to the gym. It's going to be great. And then halfway through the year, it's still coming out because it's an automatic. So it's coming out, but it's not something that we think about because it's not a visual to see. So make sure that we're looking at that and being very transparent of how you're tracking. So workbook page 7, determining your disposable income. So once we understand what those spending habits are, now let's take a look at what is your income? How much of that disposable income do you have? And what we mean is take that income, like it says, minus your expenses. Do you have, you can do this weekly, bi-weekly, monthly, however you get paid and you do yours. Everybody, like I said, is different. I do mine bi-weekly. So the income minus all, I've done my spreadsheet or, I've written it all down, all of those expenses that I'm going to have for the week or bi-weekly, monthly. And do I have a surplus? If I have a deficit, I need to go back in there and say, where can I save some money? Where do I not need to spend? Do I need to call the cable company and see if I can either switch my payday to a different week, or is there something cheaper that I can get? Always look for where can you save some extra money. If you have a surplus, this might be a time to say, ooh, I might need to put that in my emergency savings. Emergency savings can be anything. We all know that they say that we need 3 to 6 months of some kind of emergency savings in case something happened. We all felt that when COVID hit 5 years ago, right? Some places were shut down for 3 to 6 months, and we needed that income. Just like when Hurricane Helene came through, a lot of places were shut down for a whole week. And if you're working payday to payday and you're an hourly wage employer, you need that income, right? I don't know about you, but if I miss a week of work with no pay, that's devastating on your budget and your household income. So understanding that disposable income, do you have money to set aside for that, of a rainy day or whatever your dream fund might be? Your emergency fund might not be really an emergency. It might be you're saving for retirement. You're saving for college. You're saving for a home or a new car. So this figure right here is comparing your net income, the money you have after taxes, to your expenses. So this helps us decide, do we have that excess, and what are we going to do to help you build that savings, or are you spending outside of your budget? So now we're going into workbook pages 8 and 9, and this is, what are your financial priorities? So here we're going to have an icebreaker. Keisha, you keep an eye on the chat, see what people say. How would you spend $100,000 if you had that today? And while you're thinking about that, you don't have to write this in the chat, but think of something like myself, what you could cut from your daily expense. Like, I knew I was spending way too much on Starbucks and Chick-fil-A. And then ask yourself if you want to. Yes, ma'am.
I was going to say, we do have a question. It says, well, to answer that question, pay off debts and find some land was one of the responses.
Okay, perfect. I love that. I always hear pay off debt, maybe, and always think about that as also maybe take yourself on a little vacation if you've never done that. Think about yourself as well. Not everything we want to do, we always have to remember what makes us happy. So paying off debt. I know for me, I need a new car. Mine's hitting the 10-year mark. So if I had $100,000, it would definitely be buying myself a car. So I love that. Paying off bills, yes. Trying to get debt free. That's what we always want. So also think about, what is your financial priority? Where do you see yourself and your household? Maybe it's time to establish those reasonable goals. Maybe it's time to review what your priorities are, what matters most to you and your household. Maybe it's time to buy that new refrigerator. Save for those kids' colleges, right? Put down towards. So think about that when you think about what is your financial goal versus in what is, what matters in your family. What are the similarities and difference between what you have and what you're doing now? You also could start thinking about life goals, right? How do you see your financial self in a year or 5 years or 10 years? We all want to retire one day, right? What does that look like? Are you going to have enough funds? Do you have a 401k or a pension, or are you saving towards retirement? Because we can't count on Social Security, right? That's not a guarantee. So when we start thinking about those on workbook page 10, we have to set SMART goals. So when we start thinking about what is your financial priority or your financial goal, like I said, mine right now is getting a new car because I'm about to hit the 10-year mark. But I don't know about you guys, but I don't have anywhere from 20 to 40,000 just sitting around to go get a car, right? Because that's about how much they are right now. That's probably not even a new car right off the lot. But in my mind, I know I've got to make smart and wise decisions now so I can have a good down payment. That is my emergency or my financial goal right now, is making sure I have a good down payment, because I know I'm going to have to finance some because I don't have the cash just sitting there. And I also need to start thinking of my credit score, right? Because I'm going to have to finance, I want the better interest rate. So when we start setting goals, we want to make sure our goals are specific, measurable, attainable, relevant, and time-bound. So we want to make sure that create those goals that, one, I'm going to be okay if I don't make it. And why say that? Why do you say that, Miranda? Why set goals not to make? What I mean is we don't want to stress ourselves out. Financial stress is already the number one health issue, so we don't want to put any stress on ourselves. And when I say it's okay to make goals that are breakable, it's okay for me to say, I'm going to use my car fund to get a new hot water heater, right? Because I need that hot water heater. I don't know about you guys, but I do not like taking cold showers. Even though Hurricane Helene said that it's okay, Miranda, to take a cold shower, I don't want to. So it's okay for me to break that goal to pay for something like that, right? But it's not okay for me to break that emergency fund goal or my car fund to say, I'm going to use those funds to go on a weekend trip with the girls, right? So that's when we talk about making SMART goals and make them attainable. What I mean is make goals that you can reach, right? Set yourself up for success. So even if I have to say, you know what, I want to make sure in a year I have $500 in that account. I know with my budget, it is realistic, if that makes sense. Make sure that things are realistic. What you don't want to do is look at your budget and you've only got $25 a month and know that you're not going to be able to save that $1,000 by the end of the year, because it's not realistic. So that's when we talk about making SMART goals. That's what that is. So workbook page 11 is looking at creating those short-term and long-term goals. These are things that you want to accomplish in the next 6 to 12 months. Long-term is what you're going to consider maybe a year, 5 years, but less than 10. So in that workbook, it does give you an area to write down your goals and break them up into smaller, more manageable steps. Would anyone like me want to share what your goal is? Mine, like I said, is in a couple of years, I want to be able to have a good down payment for a car. Anybody else have a good financial goal that you're looking to do?
Yes, I see in the chat that we've had someone say home ownership and business opportunities. And also, everyone that's attending, if you want to just raise your hand and unmute yourself and speak directly to Miranda, that is absolutely okay as well.
Perfect. Yes. Home ownership, that is one of the American dreams. That is great. And Keisha, we do have a thing too on becoming a homeowner. So if that is something that you're looking for, that is also something that we can go in with a mortgage loan officer and say, hey, we're having, this many with the school. Let's get together with Keisha and let's figure out how we can present becoming a homeowner. So that is really good. Okay. So moving on, like I said, SMART goals, it stands for specific, measurable, attainable, relevant, and time-bound. So now we're going to go into a little bit of just some foundational banking solutions. So we're going to just go quickly over this. A checking account is a powerful budgeting tool. If you don't have a checking account or a savings account, I say get with your financial institution, whoever you want to bank with, get yourself set up with a checking and a savings. It's going to be safer than cash. As you know, most places are going cashless. With a checking account, you can use it to make your payments, check your balance, do transfer funds. I know a lot of financial, like Truist, our online banking has now. When you sign on to your online banking with your checking account, you can have a lot of budgeting tools that they offer. So that could be a way if you are not like a writer, you just want it to do. It will separate it. I know our budgeting tool with Truist on our online banking will put everything into categories. The only thing you have to watch out is like if you're like me and you go to Costco or Sam's or Walmart and you get your gas there, it's going to show up all together. So it's going to link your groceries and your gas together. You have to determine what checking account is right for you. So on workbook page 13 and 14, it's going to give you a basic breakdown of checking accounts, which one might be. So, different ones might include, a basic checking. It might be, a high yield account. Let's see if I can blow mine up just a little bit so I can see those as well for you guys. Let's see. We can go over some of those that are in that workbook. So the basics are going to be like, do you have interest checking account? The electronic banking service, remember, do you want mobile banking? Do you want to be able to have email alerts when you're thinking about that? ATM charges, you want to look at that when you decide is a checking account right for you. How do you take that? How do you look through all of that? So when you're thinking about that, just ask yourself what you're looking for and what's right for you and your household. And then in workbook page 15, this just kind of, I'll let you look at that later, just talks about parts of a check. Yes, there is still many people out there that don't know what parts of a check are. So there is that. Page 16 and 17 of your workbook talks about overdraft protection and overdraft coverage. Sometimes when you have a checking account, you can link a savings account for overline or a line of credit for overdraft. For example, if you made a $100 payment on your electric bill, but you only had $85 in your account, such as Truist, we might use that money in your savings account to cover, or we might say, hey, you've got a $100 buffer. We're going to go ahead and pay that for you. And then you pay, the difference. Sometimes financial institutions do charge a fee for that. So just make sure when you're looking at that and you're thinking about that, about overdraft protection, just remember what that is. That is to protect you in case something happens and you happen to have to overdraw your account. So just other things about overdraft, many banks, like I said, they might charge. It might be a small amount that you might not have a fee, but just look into that to decide. Workbook page 18 does go over some of those overdraft fees and options. I do know at Truist now, we do not have any more overdraft fees. That is one of the good things with FDIC and the federal government that they were like, hey, let's cut those. So I won't go into too much about overdraft or workbook page 19 and 20. It does talk a little bit about check cashing, depositing checks, and prepaid debit cards. Prepaid debit cards are good if you can't or don't want the traditional checking account. We do have a convenience card is what we do. Your direct deposit goes on it just like anything else, and it's just a prepaid debit card. So if you've thought about using a payday loan or check cashing established to cash a paycheck, there might be fees that can eat up portion of your paycheck. So that's why it's in place to have maybe a good checking account if somebody does give you a check or you have to deposit maybe your first paycheck. Make sure whatever you decide on whoever you decide to go as your financial institution that they are FDIC protected with FDIC insurance. So that way, if anything happens to the bank, like out in California, your money is safe. So Workbook's page 21 and 22 goes into what you need to know to find out if your financial institution or who you're using is FDIC. A depositor is insured to at least $250,000 per insured bank. Most deposit accounts like checking and saving options and certain retirement accounts are insured by the FDIC at FDIC insured institutions. If you're uninsured, check with your documentation to see if your accounts are covered. If not, and make sure that your banker can also locate that information. So just like on Workbook page 22, it says Mary has a checking account at Truist with a balance of $1,000. She also has a savings account with Truist with a balance of $20,000. Are her funds covered by FDIC? Yes. John has a savings account with a balance of $12,000 and a certificate of deposit worth $15,000. Yes, his are covered. So just want to make sure that whoever you have your funds with, that you are covered in case of an emergency with the FDIC. So, just a question for you all. Keisha, let me know if anybody raises their hand or puts it in the chat. Pop quiz. Which of the following transactions you can perform with a checking account? So you have a checking account. Can you withdraw cash, pay bills online, Zelle, or D, all of the above?
Yes, I have Kendra. She said D.
D, correct. All of the above. And I love Zelle. Zelle's like one of my favorite to give money to people to pay back and forth because all they have to have is usually just my phone number. And I just feel like that is just so more safe than giving somebody your whole Cash App stuff or Venmo. You know, all of this kind of stuff is great. Just make sure whatever that you use makes you feel safe. So now we're really going to get into the nitty-gritty of budgeting and savings. So on page Workbook 24, like I said, there's 3 main budgeting strategies. I like to say it's your habits and your mindset. So it's your spending and your saving habits. It's a whole mindset when you think about budget. So when you hear budget, what comes to mind? Some people might be like, oh gosh, Miranda's here. She's going to put us on some form of allowance. She's controlling. I love a budget because at the end of the payday, my money's not telling me what to do. It's me saying what I can do with my money, right? So there's 3 main things that we're going to look at. Controlling your spending, because I don't know about you guys, but some of us are very spenders and some of us are savers. We're going to talk a little bit about managing that debt, how to save for the future. And just remember, you can focus on one of these right now. You can focus on 2. You can focus on all 3. But for right now, we're going to look at Workbook page 25. And we're going to talk about the number 1 is controlling your spending, right? Like I said, make your budget real, reasonable, and be very transparent with yourself. Make it your own, okay? There's also a monthly budget checkup on Workbook page 42 near the end that is going to be great for you to go back. So consider ways if you need to make some extra money. I don't know about you, some of you, but sometimes I don't even know what's in my closet, some of those junk drawers that we got that I could probably get rid of. Do periodic checkups. If you're not calling once a year for your insurance, your cable, your phone, anything that you are spending money on that comes right out of your account, you might be over missing some money. So call your car insurance, your homeowners, your renters insurance, and say, hey, is there a deductible that I'm not looking at or I'm not thinking about? My car is now hitting a different year. Is there something, valuable? My daughter don't live with me anymore, so I don't need the umbrella policy. There's so many things that you can call. The cable company, you've been with them for 5 years. Maybe there's a promotion that they can put you on that you wasn't thinking about or that you didn't know of. Call around and do some of those periodic checkups for yourself. So managing your debt. We all want to be debt-free, but we also know how to manage and use debt smartly and wisely to be able to have that better credit score, right? So we want to make sure that we're putting aside money for those down payments, those bigger those bigger purchases. A good rule of thumb, use 10% of your income to pay it down. Reducing your debt increases your credit score, which we all know. Once you get back in, don't go back into debt. And when we talk about don't go back into debt, we mean use your debt, but don't ever close out those major credit cards. Pay them down to zero. Use them wisely and smart, and be able to raise your credit score, okay? And then, of course, we're going to talk about strategies, saving for the future. Put 10% down for emergency funds. Pay yourself first. Paying yourself first is just as important as paying your rent or your mortgage. Set aside, like I said, instead of making an emergency fund, make it your dream fund. That new purchase, that new home, or like me, a car fund. Or if you're like me as well and became a new grandma or a new Mimi, set up that. Set up the college. And when we say talk about saving for our future, I want you to know it's never too early or too late to save. And it doesn't matter how little or how much. If you've looked at your budget and you've only got $1 to put in savings, put that dollar in savings. Make it your next goal to say, okay, I had $1, now I'm going to have $2. Or I have $2, now I'm going to have $5. Start early and as possible saving for that future. Okay, pop quiz. Keisha, get ready. What is the primary purpose for an emergency fund or your dream fund? Is it to buy the latest tech gadget? B, to have funds available for unplanned expenses? Is it C, to invest in high-risk stocks? Or is it D, to use on Amazon Prime? Okay. It is to have funds available for unplanned expenses. Now, if you were my mom who has COPD, it might be the Amazon Prime, but she has learned to do a little bit of everything on Amazon Prime. So now we're going on to workbook page 26, and this just gives you an idea about how much you can save. Like I said, it's recommended to have at least 10% of your check going into some form of savings or emergency fund. So this is just a slide that just says, if you save $20 every month, what you will have, at your year, and then again after 5 years. So it's so important to have that. After that, you can have $240 and then $1,200. And then workbook page 27 just is a basic slide just to say, here is what simple interest is and here's what compound. Simple interest, what you put in there is what you're going to get. Compound is that overall daily interest that racks up. So if you're thinking I'm barely making ends meet, how can I save? This is going to be, it's simple. Everybody can. Like I said, make your budget important as your rent. Make it very honest, truthful for yourself. Make sure your budget goes along with whatever your financial goals. Also, give yourself that cushion in the form of some form of emergency. Automatic savings. I like that, out of sight, out of mind. I don't know about you guys, but if I put it into an account that I can't see or have access to, it's better for me to save. It's like, to me, If your kids are asking to borrow $20, they're not borrowing it. You've never seen it back. They're just taking it. Same thing we do with ourselves. If it's easy for me to move $20 from my savings to my checking for me to go to lunch because I forgot, then life happens and I'm already living payday to payday, I'm not going to put that back. But if it's out of sight, out of mind, and it's not easy for me to reach, or it's not showing on my online banking because I've hid it for myself, then it's easier for me to save. That's where save it. Even if you're automatically putting in $5 a paycheck into something, out of sight, out of mind. So moving on to savings goals and planning, it's on workbook page 28 and 29. First, you want to ask yourself, what do you want to achieve? Write that goal down. Have it visible. Decide how much you're going to need to make that goal a reality. Where will you put that money? What type of account? Are you you're not going to be putting it under your mattress, right, or in a drawer. And how are you going to make sure your money stays where you put it? Like I said, out of sight, out of mind. So workbook page 30 just gives you some savings options that most financial institutions have. The most important thing to look for any type of savings account is how much interest you're going to potentially earn. Some interest rates are set, while others, such as like investments, stocks, mutual funds, can vary. Look for the annual percentage yield to see how much you're going to earn. That's the main thing when you're talking about interest rates. A savings could be upcoming for a large purchase, for that new car, like me for me, or that new home. I think somebody had talked about home ownership. Even your vacation. How many of you put money aside for that vacation you're going to have each year? Or how many go on vacation and be like, I'll just worry about paying it off when I get home, right? Or, what about health care? I don't know about you guys, but y'all can't see me today, but I started the year off with a broken wrist. So I don't know, when you think about healthcare and you think about that unexpected thing that might happen, it's hard when you have to pay that first deductible, not even within the first month of the year, right? And having that emergency fund where you're not having to worry about that at the beginning of the year of how am I going to take care of, now I've got to pay my deductible. You can worry about the other things, right? Worrying about time off of work, who's taking care of the kids, who's going to help me take care of the household stuff or drive me around because, I have this broken wrist. So that's where that peace of mind of that financial comes through when you have that emergency fund out there, when you know that unexpected thing like my broken wrist in January can come up and going, oh gosh, where am I going to come up with that deductible? Do I have that money? And things like that could come. You just never know. So what's the safest way to store your emergency fund? Under your mattress? B, in a checking account? C, in a high yield savings? Or D, in crypto wallet? The safest place is going to be in a high yield savings account. So now we're going to talk a little bit about credit, how to build and repair. So workbook page 32 talks about what is a credit score? Why do I need that? Well, credit score is that number assigned to represent a person's ability and likelihood to repay back that debt over time. Your score is made up of a couple of factors. Payment history is the biggest at 35%, followed by amounts owed, length of credit history. Do you have, 10% of your score is, do you have what types of credit? All of that goes into place of making up that credit score. So creditors and lenders like Truist, they take that into account anytime you apply for credit, a loan, line of credit, vehicle, mortgage. The higher the score, the more favorable you are to receive the lowest interest rate. Also, some insurance, and I say some, insurance companies like car insurance, homeowners, they look at your credit score because it determines, are you going to be able to have the funds? Are you paying stuff back? They look at that and they pull that because it will tell them, do you make payments on time? Can they trust you? So even your car insurance might look at that. So the higher your credit score, you might get a better rate for your car insurance or your homeowners or renters insurance. So, like I said, lenders use that information to determine whether to lend you money. Make sure you get a copy of your credit report every year. You can get that from annualcreditreport.com. Truist does offer free credit report monitoring on our accounts as well. So it gives you like your Advantage credit score. But if you're not pulling it every year, please do so, because you never know who might be out there using your ID. They might have stolen your information, and you won't ever know until you go to apply for something and you get that decline record. So please take a moment to do that. So workbook page 33 and 35 just talks about a credit report. What does that look like? It is a snapshot of, like I said, your financial history. It takes a range of information of your financial, your spending, your payment histories, and it's just a huge sum of what you do. Make sure when you pull that credit report and you're looking at everything, make sure that you're going over and seeing, is all of your personal information correct? Is your name on there? Especially us women that have gotten married or divorced, or you take out your middle name, use your maiden name, all of this good stuff. Make sure it is all you. Your address is correct. Your date of birth. Is everything on there, your credit history, is the people that you owe? Is there any errors? Because an error can affect your score negative. But it's free and easy to update and ask for a request for that. Pay extra attention to your account history. You want to make sure that accounts are reported correctly. So if you've paid something off, it shows paid off. It doesn't still show it on there. So workbooks page 36 and 38. Through these pages, there's going to be ways to help you establish and reestablish credit. Checking accounts and savings accounts can not only be a budgeting tool, but they can help you manage debt, because that's an important part of building and repaying your credit. Can you pay it off? Once you pay it off, make sure you are maintaining. You have the funds to be able to make those smart and wise decisions. Get a copy of their credit report, like I said. Open that checking and savings. Consider ways to work with a reputable credit counseling if you need that as well. I know with Truist, we do have Operation Hope that helps with that as well. So workbook page 39 is tips for using that credit responsibly. Once you pay it back to zero, how to maintain it. Pay the balance of your account full each month. So maybe you use that credit card to buy all your groceries and gas, and when you get your bill in, you pay it off. Payments on time. Make more than the minimum. If your minimum balance, let's say on a credit card, is $25, do at least $30. Try to pay at least something more if at all possible. Workbook page 41 talks about the benefits of paying down debt. Increase financial security. Life enjoyment. I don't know about you, but money can make you, they say money doesn't make you happy, but when you're not stressing about it, it does bring you joy, right? I was so relieved that I had an emergency fund set up that I did not have to worry about that the first part of the year, how I'm going to pay my deductible, how I'm going to pay these hospital bills. And I was already so upset about that it happened. You guys, I was thinking I was still 20 and I was skating with some 5-year-olds at a birthday party doing the hokey pokey. So I was not thinking of that. I was enjoying life, right? And then there was that unexpected moment. And when you're not thinking about how is something I'm going to pay for something, it does. It reduces that financial stress. Because the last thing you want to do is, let's say something happened on your way to work. What are you thinking about all day during work? you're not thinking about the job at hand, are you? It's like when your kids are sick and you still have to go to work and somebody else is taking care of them. You're thinking about them instead of the job at hand. And so that's why we say financial stress is the number one health issue, because it can lead to other factors. And then another benefit, again, we want that improved credit score, because I don't know about you guys, but thinking about having a car, I don't have the cash in hands to take care of something like that. And then at the end of the day, it becomes ours. So workbook, like I said, page 42 has that monthly budget checkup. Did you meet your goals for the month? What is your strength? What can you do differently? And then, of course, workbook page 44 has Truist Money and Mindset. Now, you do not have to bank with us to go in there. It's truist.com/money and mindset. It has a little bit of everything for you guys. It has a monthly PDF form of a monthly budget sheet. It has a debt calculator. It has I need all the forms to get a mortgage. There's different podcasts. So a lot of great tools and resources that are out there for you guys. So Keisha, back to you. Thank you guys. And any questions or concerns for today?
Thank you so much. This is great information. I'm sure everyone's really enjoyed it. Let me just check the chat to make sure. And as well, everyone, please feel free to unmute yourself and ask Miranda questions
Yes.
directly. We have a smaller group, so it's absolutely fine to raise your hand and speak directly on the meeting. Okay, all right. I don't see anything in the chat or anyone raising. Oh, wait a minute. I do see one hand. Yes, Kendra, go ahead.
Can you hear me?
Yes.
Okay, yes. I
Paying,
actually
yes,
do have a
ma'am.
question. When paying off debts, is it better to like do it yourself? I guess like communicate with the credit agencies or collections agencies yourself, or is it better to go through like a third party that can potentially lower the rate for you?
Okay.
What do you
It,
recommend?
it all It all depends. If you go through a third party company, let's say like Operation Hope, you want to make sure that they are for you. You want to make sure that they are a reputable company, because the last thing you want to do is have a third party company help you manage those payoffs with, let's say, Visa or MasterCard. And it might show that they've wiped it off or they've lowered the balance. And then 6 months to a year or even longer, it might be 3 years, all of a sudden another third party company has picked up your debt. So the thing that you want to do first is make sure if you go through a third party company, it is reliable, trustworthy, reputable. Secondly, anything that you do, if it's personal, you've called up the collection company or you owed, Visa, whatever. If you settle any amount with that company, you want to get it in writing, paid in full. So let's say you owed them $5,000 and they said, we'll take $2,500 and it'll be done. Get them to write that paid in full, not that you agreed to a settlement, okay? There's a difference. Because what happens, they say agreed in settlement, there's still a third party company that might come and pick up that debt, that you do not want that. You want it paid in full and get them to also send letters out to all 3 credit bureaus that account now is closed, paid in full. Does that make sense?
Yes. Kendra, did you? Did it? Was it
Sorry,
okay?
yes, it makes sense.
Okay.
My daughter had a doctor's appointment
No,
unexpectedly,
perfect.
so I
Yeah,
muted because I'm in the car. But yes, that makes complete sense.
perfect. Great.
Okay, let's see. Do we have any other questions from anyone? Please feel free to raise your hand and unmute yourself. Okay, let's see. Let me just check the chat. Let me see here. Okay, yep, I think we're good here. Okay, well, once again, Miranda, thank you so much for joining us. This has been great
Mm-hmm.
information. Do you have any contact information you'd like for me to add in the chat to give everyone?
Yeah, you can send them. My email is miranda.teague@truist.com, and my office number is 864-282-3606.
Okay, I've added that information as well. And thank you again so much.
Perfect.
I will be getting in touch.
Thank you. And
Yeah.
yes, and I got your email, and I will send over that workbook again.
Okay, thank you. Yes, thanks so
Okay.
much. And we
Thanks,
will get it to
Keisha.
everyone. Thanks. Have a good day.
Okay. You too. Bye-bye.
Mhm. Okay, all right. Well, thank you everyone for joining us. If you haven't already, place your student's name and school. We only need it one time in the chat, but if for some reason you joined us after the beginning of the meeting and haven't done so already, if you could just place your child's first and last name and school that they attend. It's a OnTrack Greenville school, which is Lakewood, Tanglewood, and let's say Lakeview, Tanglewood, and Berea Middle. We will basically verify that information with those schools and send the gift card directly to the school, and the parent coordinator or staff there at the school will get them to you within the next 2 to 3 weeks. Also, a reminder, we have these meetings now. We will have them available on our YouTube channel, where you can view them at later dates or share with friends, or just watch some that you may have missed at certain times. We thank you for joining us. And if no one has any other questions, have a good day. All right. Thank you.
Hey, Keisha, did you see my question? I said I don't have one FL school. Do I still need to give you the name of the schools, or am I okay to just log
Oh,
on?
yeah. See it now. Yeah. No, you're okay. Yeah. Because we have your information.
Okay,
Yeah. That's just for
perfect.
the
Thank
gift
you.
card. Yes.
Okay, perfect. Thank you. You have a great day.
Yes, you too. Thank you.
You're welcome.
All right. Talk to everyone later. Bye.